Good morning and welcome to this week's Elliott Wave market analysis webinar, the Elliott Wave and cryptocurrency market analysis. So we look at all those currency pairs. So welcome, I hope you all had a wonderful week, profitable week. So we go ahead again, as always. We start at this time. Our webinars are gonna start this time until otherwise stated. So the time is 10 GMT right now, which is 12 p.m. in South Africa. So the times for the webinars is going to be 10 GMT unless otherwise stated. All right, so let's get right into it. I'm going to open the correlation between the DXY and the dollar index. Right, so for the benefit of those that have not watched last week's video, where I showed a little bit about how you can take advantage of the timestamps. So this is how these timestamps work. So the video or this webinar goes for about an hour and a half, sometimes for about 1 hour 35 minutes. And I believe not everybody wants to watch each and every single pair. So this is what makes it easy for you. So this last week's video with all the timestamps. So to make it easy, if you want a Euro US dollar analysis, Euro US dollar, let me just show you how I got to this point here, show less. So you will typically find it on YouTube, written here, just under the description. There's a tab that says show more, you just click on it, and then it opens up all the pairs that were analyzed during the webinar. So if you're looking specifically for Euro US dollar, you just click on Euro US dollar. And it starts there. Similarly, if you want US dollar JPY, it takes you straight to US dollar JPY, CADJPY. Everything is linked. So it takes you to just about 10 minutes before the start of the analysis. So which works perfectly. All right, so you don't have to go through the whole video, toggling around, searching for a specific chart like this. This takes too much time. So I also use this to just go and refer back to the analysis because it makes it easy for me as well. So you can take advantage of that. Works perfectly. Right, so about the course, anybody who's interested about in the course, look out on the description of the video for my contact details, either WhatsApp, email, send me an email and I'll send you the details. Our next course actually starts tomorrow for the whole week. So after the course, you stay with me for 2 years. And for 2 years, every single day, we have daily webinars where we go through the charts and trade setups for the following trading session. So the $529 US cost for the course is a once-off that includes all of that for a whole 2 years. So if you want more details about the structure and the content of the course, send me an email and I'll send it to you. So even if you're not interested in joining up now, you can just send me an email so you can at least have the information so you know what the course is all about. Okay, so let's do that. I see somebody has scribbled on my screen here. Let me just disable that. All right, let's get that one off. That's clear. All right, so that's that about the course. So Euro US dollar and the dollar index. So you can see that today I've got, I'm gonna start it from the lower time frame, going up to the higher time frame. So what I've got here is Euro US dollar at the top and the dollar index at the bottom. So if you can already see here at the end, we have what looks like a V pattern. So I'm already looking for next week for upside on that pair, on Euro US dollar. So what we need to just wait for on the 1 hour is a flag, a 1 hour flag that will take us at least back to this level. We'll go in depth back to this level and I'll show why I'm looking for that level. right? And then the dollar index, as you can see also, it has broken at the bottom. We're just going to be looking for a flag to take us back to that level. This pattern is very reliable, all right? So this is a nice trade for next week. It's not a big trade, but it could be, and I'll show why I'm saying it could be a big trade, right? So we've been looking for an entry on this whole corrective structure since the end of January. This has been corrective since the end of February, as you can see. And we've been looking for this to complete so that we can get the trade. Right, so let's go into, well, before we go into that, so this is the structure that we're looking at. This is the correction that we're looking at. You've got a string here, which I'll show when we look only on the Euro-US dollar pair, and then a 1, and then a 2, and then a 3. Right, so this is what we were looking for, and we were looking for this to do this, give us another one, which was going to make this a WXY. W being the first correction, X being the connector, and then a Y being this last one before we get the move up. But it looks like there's a slight change on the structure, but it doesn't change much. So this is what could be happening looking at what this new string has done here now. Looking at this and looking at the fact that this may go up, so this may be your new structure. So you've got your impulse here, and this could be a regular flat, see here, or an expanding flat, which could take this one up here. 1, 2, 3, not with that color, still with the yellow color, 1, 2, 3 back, and then we go up. All right, so let's show this clearly on Euro-US dollar alone. So you know, Euro-US dollar and the dollar index are inversely correlated. So whatever is happening here is the inverse that's happening here on the dollar index. Let's go into Euro-US dollar. Let's go back to one chart. Okay. So originally this was the structure that we were looking for. 1 must behave, misbehaving now. That's 1, that's 2, 3 waves. And then we're looking at this one as a 1, 2, 3. And then we're looking for this to come and give us another one similar to this one. And then we're looking for this to go. All right, so there's a slight change here because this does not look like it's gonna come back down here. It's gonna give us a deeper one. It looks like it wants to go up now. So going up shows us the next structure that will play out. So let's just move this one so we can get some space here. Let's erase this. So you can take a snapshot of this and see what the difference is going to be. Right. This one. Now we're going to be, actually I'm going to do it with a different color so you can see 1, 2, 3. So then this one becomes one structure. This one goes up, go retest there. So this now becomes one big connector. All right, so this can even actually go now. So which will mean that this is the all of the correction, but I'm only targeting, my first target is here. Let's get this one in blue. First target is here. Why am I targeting here? Because this structure can give us the other 3 waves that we're looking for, which will make it a W, a X, and then a Y. Unless it goes here, then this means that it's starting a 1, 2, 3, 4, 5 for a big move to the upside. But I'm still inclined for it to come back down for one more. Okay. Right now, what we have here is this structure, a very reliable pattern. I'm going to show you why I say it's reliable. I think I've shown so many times how this pattern is so reliable. So what you need to wait for is a corrective structure, corrective flag above here for a move back up here. Right, so let's compare this one with a structure that has played out previously, that's US dollar chief. So these structures are mostly similar. So let's go to US dollar chief. Left-hand side is Euro US dollar, right-hand side is US dollar chief. Right, so we've got US dollar chief. If you remember, we also wanted to sell, US dollar chief when it broke this line here, this trend line here. Let's draw it properly. when it broke this trend line, we wanted to sell it there because we thought that was going to make this structure here. But when it broke, it gave us a V pattern. And you see that it gave us a V pattern. What happens after the V pattern? You get a big move to the upside. What are we getting here now? We're getting a V pattern as well. So let's even compare it properly now. So you can see the exact similarity between these two structures right now that have formed. Okay. So you can see how similar they are. Okay, so I'm going to cut this one here, right here. Actually, I should cut it. I want to cut it here. Not there. This is where I want to cut it so you can see right there. That there's absolutely no difference between this structure. And remember, these are two different pairs. Look what happened on the left. On the right, this has already played out. Okay, the move on the right has already played out. This is the move on the right. And if I take this to the left, copy, paste it, you'll see that this pattern fits exactly here where we are. See, exactly the same pattern, two different pairs, but this pattern is exactly here. But we know what we know. We know that this is already played out to the upside. Okay, if we just play it. So if we can just play that. Let's get that played out. So you can see that this is already played out. That pattern has already played out this move. What are we expecting? We're expecting that Euro US dollar will give us an up move as well, based on what has happened on this one. Can you see? All right. But I'm not saying that it's going to give us this move all the way to that level, because the structure here is a little different. So this one on the left hand side can only take us first stop, because we're looking at the structure. First stop this level. Okay. If this V pattern plays out, we're going to be looking at it to come play out at that level, to come and retest there, based on these V patterns. All right. That's US dollar, Euro US dollar. Now let's move on to US dollar chief, the one that we've got on the screen now. Okay, let's go back to the full chart. US dollar chief. All right, so US dollar chief, we've been looking at this corrective structure here, as you can see. This is a corrective structure. We're waiting for it to break down. It broke down here, but it made a V pattern. So now it's got an impulsive move down. So what we're waiting for, we're waiting for a flag. Remember what we're waiting for on Euro US dollar? Euro US dollar has got a V pattern like this. We've got this move. We want a flag for a move up. Now US dollar chief, we want a flag for a move to the downside. Obviously, these are inversely correlated because you've got the US dollar on both. Okay, on this side, US dollar is the base pair, and on Euro US dollar is the quoted pair. So they will do this move. So US dollar chief, we're expecting down. Euro US dollar, we're expecting short move to the upside, and then we're gonna update it as it goes. All right. Okay. Let's look at US dollar CAD. US dollar CAD is making a very interesting move. Okay. So what you have there is a swing up to this level, but now it's making this 1, 2, 3 wave move. And the nice thing about this 3 wave move is ending with a V pattern. So we will be expecting at least a 3 wave bounce here. We don't know if it's going to go back and retest there, but for now, what you get when you get an impulse and a correction here, you take the trade to the upside, at least minimum to the 50% of 50% of this swing. So that means half of this. Okay, that will be your first target. But as you can see here, we'll be expecting it to be a corrective structure, not an impulsive move. So it may be a slow move. Okay, so what is your trade? You wait for this to break to the upside. You don't take any trade until it breaks out of this V pattern. Okay. Yes, the blue box magic is ongoing. We have actually reversed here based on the blue box magic. Asim is in the premium group, that's why he knows these things. So let's just go 4 hour and show you what we're looking at here. How powerful these tools that we use are. Okay, 1, 2, and then this one. Let's just do it with the fibs. Using the fib extension. I think it's already projected. There's the blue box magic. It turned here based on this move being equals to that one. If I just take this one and project it, from where this string starts, you'll see that it is right there on the blue box. Not 1 pip more, not 1 pip more than the blue box. Right, so we need to see if this V pattern plays out, because right now you've got a 3-wave move. If you're gonna get continuation here, you need to get a 3-wave move like that for another move to the downside. Okay, so right now you're getting a V pattern, you may get this move to the upside, but that may just be a 3-wave pullback. So we need to see how it plays out. That's US dollar CAD, pound US dollar, pound US dollar. So I'm going to show you here something interesting about looking at the pair in different time frames. So if you look at this one on the 4-hour time frame, you can see clearly here that we've got a 1, 2, 3 move, right? Okay, we actually sold here because we wanted another 3-wave move. Actually, we wanted a move like this, but we only got this piece here and then it reversed. But that doesn't matter. Don't lose money doing that. So yeah, you've got an impulsive move up. So what do we expect? We expect that we're going to get a corrective structure, which may take us back up here. And if it takes us back up here, there's a possibility that this becomes a 1, giving you a flat in the middle. So similarly, going with the theme of a weak dollar in the week ahead, we'll be expecting a correction here to at least come and retest here. All right. So can you see we are bullish here on the 4-hour time frame? Look what the daily looks like. If I go to the daily, you'll see something different. That's why when we trade wave theory, we trade all the patterns. I mean, all the time frames from historical data up until to the lowest time frame. So if you look here on the daily, do you see that we've got an impulsive move down? And this here looks like it's correcting on the daily for a move down. So you need to know where the move is going in all the time frames. Okay, so lower time frame, that's where we start taking the trade, taking it up. But for now, it looks like we've got a short move to the upside here. Okay, maybe even get this one as we've shown in the 4-hour time frame. That is the difference. So you'll see that the personality looks different when you look at it with a naked eye. So if you do not have the sequence and the structure, you will not know where the market is going. Okay, so you need to understand the sequence as well. All right, so that's pound US dollar. So pound US dollar on the 4 hours, you've seen, you wait for the flag for upside. We just go to the 1 hour. It's already making this small one here. We wait for it to complete. This is too small. Wait for this one to complete, to go and retest there. Right, and in general, the pound pairs all are looking all bullish. You should watch the pound pairs. Watch the pound pairs, don't skip the pound pairs. They look very interesting for further moves to the upside. So that's pound US dollar, Audi. Audi US dollars, go 4 hour. Okay, so Audi US dollar has got a V pattern in the higher time frame and the lower time frame. We've got this one here, we've got this one here, and you've got this one here. So which means it may turn here with the lower one first. And this lower one, if you look at the lower one, looks like we've got an impulse down, correction, will give us one more down before we start reversing. So we will only buy US dollar, Audi US dollar, when it gives us an impulsive move up and gets out of this V pattern here for upside. Okay, so if I showed last week the overall structure that I'm looking at on Audi US dollar, let's go daily. We're looking at this as a diagonal like that. So meaning that this is 1, this is 2, this is 3, and then we're possibly building this one as a 4. So this 4 should end here, and you can see by the diagonal that this 4 could end up here, and then we're gonna get a wave 5 here. Okay, so we are here towards the end of 4. Okay, so we'll be looking for a move to the upside. Do you see why when we are in the lower time frame, we're expecting a move up? We're not just expecting a move up because that's what we're seeing on the 4 hour. It's because we have got this whole structure historically. Okay, so even this structure, we could see it historically, and eventually this will come back down for a big move to the downside. Okay, so where are we now? We're looking at this V pattern, could possibly come and tag here, and this whole structure will be a regular flat for a move to wave 5. Okay, so that's what you need to wait for in the lower time frame. Wait for that corrective flag. Wait for that corrective flag. It may come back down first, as I've shown here. Getting this flag, one more down before we get it up, and that will just be completing the V pattern there. Like this, let's do it clearly, like that. That will be the V pattern. This completes it like that, come back down, impulse, correction, we go back up. All right, New Zealand, US dollar. So New Zealand, US dollar is a little bit interesting. Right, so if you look at New Zealand, US dollar, the rest of the structure, the first piece of the structure looks like all the other US dollar pairs. Right, but then this one looks a little bit different. I think I showed this one last week. You see you've got 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. This 3 does not look complete. It may come and complete here to give us this flat correction here. Okay. So you can see that it's just going in 3 waves, 3 waves, 3 waves to make this correction. So this correction is a flat that is built up of corrective structures. You can call this one a WXY and not an ABC because it's built of corrections. It's a 3 wave in combination with another 3 wave. So what we have here, we're having this one looking bullish or upside. Let's just look at it closely, still on the 4 hour. All right, so we're getting this looking like a corrective structure there. So it looks like this move up is not complete. It may come back and retest there, completing this flat correction there. Okay, so let's keep an eye on this one. Let's go 1 hour. But I prefer Euro US dollar more than this one. You can see here, looks like a V pattern short term. May do this. This is a small one, as you can see. Giving you this as a flag, then to go. Okay, so you need to know which ones to trade. You see, this one is a small one. It's happening, it's on the 1 hour, but we know you're gonna only get a short move like that. And then that short move can just be giving you a 3 wave pullback. Okay, I think that's all the US dollar pairs. Let's do US dollar ZAR. US dollar ZAR, this is how we looked at it last week, a couple of weeks back. Looked at this as impulsive move down, and we're looking at this as an impulse, and this in the middle as a expanding flat. I didn't draw it clearly. Let's draw it clearly. That's 1, 2, 3 expanding flat. So US dollars are, we expected to get a move here that was similar in size to this one, like that, as you can see over there. So we're expecting it to come to that level. Why do I want it to come to that level? Because if it does that, US dollar against ZAR weakness will resume again. Let's take this off, because overall this will be a zigzag correction for a move to the downside, making this just a 1, a 2, a 3, and then we continue with the move down. Right now, the rand looks bullish short term up until around 12.15, 12.20. Okay, so it's not time for to sell your ZARs yet, but for now we've got that move. So why am I saying it's not time yet? So this is because this whole move on US dollar ZAR is still very much bearish, as you can see, still very bearish, and we are still looking at this as a 1, as a 2, and we're looking for this move, just one of the options, this move to come around the 9 ZAR area. Okay, so this is why every corrective structure here, every move that happens here is corrective structure for further move to the downside. Okay, as you can see that this was just correcting all the way, just kept making corrections as it goes down. So similarly, that may do that all the way up to the 9 ZAR area. Okay, so the only time that move will not go exactly to the 9 ZAR area is if we start getting a move like this, and instead of a zigzag, it makes a flat correction, then it may not go exactly to the 9 ZAR, but around 10 ZAR area. Okay, but we'll focus that after we see what happens with this correction currently. But those are the two possibilities to go to 9 ZAR area. All right, I think we've covered all the US dollar pairs. If I missed anyone, any US dollar pair, you can just type on the chat box. Let's go. Yen pairs, US dollar JPY. US dollar JPY. This chart, I'm sure most of you have been following for over a year now, are tired of seeing this impulse. 1, 2, 3. And then a correction in the middle there, regular flat. Making this a W, X, then a Y. Okay. This one here looks like an ABC. This is an A. This is a B. This is a C there. What does this C look like? What is the B? The B is this move. As you can see, this is how we forecasted this. We forecasted this 104 while we were still here. When the pair was still here, we were looking for this to come down to around 104 area. Okay, so now it is making this move. 1, 2, 3. We don't know if this is the wave 4 yet. That will give us another wave 5 down, because you can already see that we've got 1, 2, 3, 4, 5. That's what we're looking for the last move to the downside. And this last move should be the one that goes in exactly around between 102 and 104, which is where we're looking for reversal that will give us this move. Can you see how impulsive this move was? That's the kind of move that we're looking for. And that move was worth, if you just measure the pips there, this move was worth over almost 2,000 pips, 1,900 pips. So we'll be looking for a move like that. This is why we would wait for this move for the whole year, because we know that when it makes the pulse, we get so many pips. And when it's a 2,000 pips like that, you're not just going to take one trade. Whenever it corrects, you're just going to keep taking these trades. So you can have 5, 6 trades running here for 2,000 pips. Okay, so that's why we track it like that. So let's just go to the 4-hour and look at the last piece. Switch this off. So looking at the last piece, there are possibilities here. So this is the first piece, the first one, and a pullback. Pullback in this degree. And then internally, we've got this one here that makes a pulse and a regular flat or running flat, whichever one it looks like there. And then you're getting this SA. One, two, three, 4, 5 internally. Looking at this as a 1, 2. If this is a 3, possibilities are that this would have been a 4, but this one looks like just a single wave. So the 4 could be this whole 3-wave move here, which looks like a regular flat. Giving this a 4, it looks like we've built a 4 here, and now we may go for a wave 5 to the downside. So how do we know that? How are we going to know that we're going for a wave 5? We need to get a flag here. We need to get a flag to show us that we are going down for wave 5. Okay, so let's look on the 1 hour and see if we're getting any flag or any impulse to the downside. Looks like it. Okay, so we need to be patient with this. This impulse does not look very convincing, so you need to get a corrective flag here to show that we are really going to the downside. So if you get a flag here, you're taking it down. That's US dollar JPY, Euro JPY. So Euro JPY, let's go 4 hour or maybe daily first. Remember what I've said for the last couple of weeks. Said we've got an impulse here. We've got this corrective structure. So it's building up exactly as we analyzed. And I said from when we were still here at the top that I want a structure similar to this one. So something similar to that should be something like this. It did not have to be a zigzag. It could have even been a structure like this. That would still have been fine. Still a corrective structure, right? It does not have to be this one. It can be any of the corrective structure. Okay, so which one are we getting now? It looks like we are getting this one. And this is the correction that we've been looking for here in the middle. So when this correction is complete, we'll be looking for this to make this move to the downside, giving us this 1, 2, 3 wave for then another move, possibly similar to this one to the upside. Okay, this move similar to that. And also alternation. Note here, let's get this one off. Note how this first piece here was slow. This one was very slow coming down. Impulse, and then this one was very impulsive. So this one here, the top was fast. Correction. So possibilities are that, I mean, alternation is not a rule, it's just an observation. Possibilities are that this move to the downside may go down a little bit slower than the first one. But either way, when we get that one to the upside, it will be a nice move. But we're gonna get this one as well. Okay, let's go to the lower time frame, 4 hour, and look at this piece here. Okay, so that is that correction. Now that we can see it clearly. How does this correction look? It looks like a impulsive move up, 3-wave back, move up. This one looks like it wants to go and do this. So here you're getting a flag. So after this flag, this needs to come and retest here. So if it retests here and makes an impulsive move like that, gets a flag, then you're taking it down for that big move, for this move here to the downside. That's what you're going to be looking at. So all of this will just be a regular flat. Very easy. Okay, Chief also making a similar move here. We've got an impulse, we've got a correction here. Here you've got a correction here above the flag already. So you need to take it up, at least for this 1, 2, 3 wave pullback. Let's see, this one could even go further up, but we'll update that after we see how this move goes. So if you watch the previous webinars, I actually compared Chief with US dollar CAD move. So you can watch the previous video. It's easy to refer back. You just go and click on CHF and you'll see that I've done the analysis and the comparison between CHF and US dollar CAD. Okay, so that looks easy like that. Audi. So all the yen pairs have made this 1, 2, 3 moves and the impulsive move down. So we just need to see if all of them are going to give us flags for downside. So Audi, New Zealand, CAD, JPY, all have this similar structure. You'll see as I go through them quickly. New Zealand, that is the same structure. 1, 2, 3, impulsive move. This one is even starting a correction here. So we'll be expecting a move down here. CAD, similar. Okay, you can see they all made similar structures. 1, 2, 3, then impulsive move down. So we wait to see if we're going to get any flags for downside. Right, so that's all the yen pairs. Now we look at pound JPY. So pound JPY, we're still looking at this whole move here as a correction. All of that is a correction. So we started with this 1, 2, 3 move with a shallow retracement here. So we were looking for this as a 1, 2, 3. So we want this to break to the downside, give us a correction. If it does that, then we're getting this move to the downside. We're still looking for this to come down here. Okay. Of all the pound pairs, the pound yen does not look bullish. Okay, we're going to do the pound pairs just now. Okay, so we'll be looking for this move to the downside. If it gives us an impulse and a flag, we're taking it down. Okay, let's do the rest of the pound pairs. Pound CHF. So pound CHF, we're on the 4-hour. If you remember, I said all the pound pairs, all the CHF pairs, not just the pound pairs, all the CHF pairs have made this type of move. Okay, this is not the right way of drawing trend lines, by the way. Your trend line should be something like this. There's still people who don't know how to draw trend lines properly. Right, so after this ending diagonal, you had this, where this move to the downside. And all the CHF pairs, we're comparing them with AUDCAD. This we saw when it was still at the bottom that it was going to come and retest here. Okay, so we want this to turn back. Why do we want to turn back? So let me show that again. Let me show that again. Let me show that comparison why we want that move on the CHF pairs. So this 4-hour, and I'm going to bring on the left-hand side, on the right-hand side, I'm going to bring AUDCAD. Let's look at AUDCAD. Where's AUDCAD? There we go. Okay, so AUDCAD will be on the daily. And this one will be on the 4-hour, that's fine. So look at the comparison. I think I've shown this for the last 3 weeks already. You have what looks like a leading diagonal in wave A here on the CHF. That's your move. That's your leading diagonal. Similarly here, you've got an ending diagonal. But what happens after that? What happens after that is this move to the downside. Comes back and retest the top. When it retests the top, it comes back down with this move. This is the current move now, which may even come back and retest the low here. So what do we have here on the side? We've got this one here, and now it has now retested the top. We are now at the top, and it's showing us signs of reversal at the top. We're going to go to the top. So what are we going to expect? We can expect that we're going to get this move to the downside. And then if this one comes to this move to the downside again, we're going to expect this move. But the nice thing about this comparison is that this one has already played out. This one is yet to play out. So we can compare and copy this move when we trade. Let's go back to one chart and look at only pound CHF now. So it's a similar scenario on all the CHF pairs. So why do I say that it's giving us signs of reversal? You can see that we've got a V pattern right at the end. So something like that. So this will break to the downside. If you look at MACD there, you can see that we're getting divergence. The RSI strength, okay. So we know when to enter when the indicators tells us the end of the cycle. Right, so right now, looks like we're getting to that end, and that may come back and retest to this level. So if it just retraces this level, it means the pound is still bullish, because this will just be a correction of the whole move that will still go up. Okay, so that's how we're looking at this one. That's pound CHF. Let's do the rest of the pound pairs. It's back to pound AUD. So pound AUD is very interesting. Let's just look at the end of pound AUD first, and I'm going to compare this one with pound CAD as I did last week. Pound AUD has got a move to the downside, and it's got a corrective move here. 1, 2, 3. So possibilities are that this one will retest there, maybe for another move back, but this whole structure will be a 1, 2, 3 back for a further move to the upside. That's why I'm saying all the pound pairs are looking bullish at this stage. Let's draw this properly. Straight line. Pound pairs look very bullish, okay? But they're still in these corrective structures. Right, so let's keep an eye on this one. So, but if this one gives you a flag here for continuation, this move can actually be like this: 1, 1, 2, 3, 1, back up. Okay, so we need to see what you get here. So looking at pound AUD, now that I've got, I can show you this with a bars pattern. Let's just show you the previous move that played out and show you how this bars pattern tool can help you focus. If you look at this first move here, from here up until, no, that's not the move, that's not the pattern I'm looking for. I'm looking for this one. Show you how you can trade similarities. Similar pairs. Look at how this one fits. I want to try and extend it. Doesn't want to. Let's undo. Let's put it right there and just extend it. It's misbehaving. There we go. You can see that this one, it fits snugly over there. It's exactly the same pattern. See where the way I pulled this one? I pulled it off here. There's this move here. Similar. That's the move, maybe with a different color. That's the move. See how the market always repeats itself? That's the move. So after this yellow move, we got this one. So because we knew that after the yellow move, we get this, even here, we knew that after the red move, we need to get a big move to the upside. So we traded both these moves using these patterns. I was not using this tool at the time. I was just looking at the similarities, but it works perfect to show exactly how these tools work. Okay, so now let's compare pound AUD and pound CAD. And there's a reason why I want to do that. Let's switch everything off here for now. On the right hand side will be pound CAD. Let's just move a little bit up so you can see. Right. So pound AUD, I'm gonna go one daily here, so we can have the full structure. If you remember last week, the last 3 weeks, we were looking at this at this pattern here. After the swing high to the swing low here, you can see that pound AUD has done this move. Okay, that's the move that we traded to the downside and to the upside. And now pound CAD has done the exact same move now. So we're expecting this move to the downside here as well. Okay, so that's a possibility. So we need to see what if the structure is giving us that at the top. We already have that reversal. So last week I showed that this structure here, reversed at the 100%, between 100% and the 1236 extension. Let's just do that again. I think if I switch it on, it's still there. You see there, let's switch it off. You see this blue box here on the right hand side between 100% and 123. This one exactly at 100% and 123. We focused this before it happened. That's what a trader does. You focus the right hand side of the chart. That's what makes traders. Anybody can come and label a chart that is already played out, but to focus the next move, that's what makes it difficult. You can know the wave theory and understand how it works, but to focus the next move becomes a challenge if you do not have experience training. All right, so that is the move that we're going to be looking at. Now I'm going to go back to one chart, which is just pound CAD now. Let's go pound CAD and see what we're getting. Let's switch off. Pound CAD on the daily, it looks like the move looks impulsive to the downside. Looks strong, like a strong impulse to the downside. So if we get a flag like that, then we may get this move to the downside or all the way down. Okay, but on the 4 hour, it looks a little bit slow. So we need to keep an eye to see what structure it wants to form here, because here it looks like very slow move. So if it breaks out of here and makes a flag, we're going to take it up here one more time before we start taking it down. So if you see the other patterns that retest those tops, you'll see that they come back and retest it before they go back down. So let's see if this one wants to go and retest first before it goes down. So we've got an impulse here. On the 1 hour, you look for corrective structure. After the move, you're already starting to get this one. So let's see what you get after that. All right, so that's pound CAD, pound AUD we've done, pound New Zealand. Pound New Zealand on the 1 hour. This could be this structure. It could be making this structure actually, which is 1, 2, 3, and then we go up. Get a flag here for a move further up. So let's see in the higher time frame what we are looking for 4 hour. If you remember, I was saying that I want this one to come and retest this top. So if this is the corrective structure and you can see that it's not going impulsively down, it's making a correction like that. So there's a possibility that this can still give us a correction, comes back and retest the top. Why do we want it to retest the top? Because this is 1, 2, 3, this is 1, 1, 2, 3 to the upside. It will give us that move. So that's what we're going to be looking for. And you'll see that this move has already happened on EURCAD. All right. Is that all the pound pairs? Pound, JPY, Chief, CAD, Audi, New Zealand. Start with the Euro pairs and we'll start with the Euro pound. Let's look at the Euro pound, go daily. Euro pound has been in a correction for over 5-6 months now. And we are looking at this move here as a V pattern. So if this is a V pattern, that means this move will go up first, will go and retest the top possibly, or even break the top and go up. Initially, when we sold it here, we actually sold it here. We wanted it to give us a move, a correction here, and then a move down. Okay, but that has since not happened, and this has now looked like a V pattern. If it's looking like a V pattern, we're going to be expecting a passing move to the upside for a retest of this top. Okay, so this is the V pattern that we have currently, and this pattern looks like this: impulse, pullback, 1, 2, 3 waves. We're getting another 3 waves here, 1, 2, 3 waves. Okay, so we could be getting the last 3 waves like that before we get a move to the upside. A move to the upside. So this may need to pull back up again, may pull back up correctively, one more down, and then we're going to get this move. And we know the dynamics of a V pattern. What it does is, when it breaks out, I always tell my traders, when it breaks out, don't panic that it left you. Typically, the V pattern comes back with a sharp move down before it starts going again. So it always gives you an opportunity to take it at 50% of the price that you would have wanted to buy it at. Okay, so that's what you're going to be looking at on Euro Pound. That's the daily and the 4 hour. The 4 hour looks like you've got an impulse and a move up. So your impulse starts here. We don't ignore the spikes. They are part of the market move. The price has traded there, so we don't ignore it. So could get something like that, and all of this could be a flag. But this is too sharp. It's a sharp reversal, so it may give you another one like that before it goes. Okay, but either way, you take it when it breaks out of here. If it comes here and it starts showing signs of reversal, you move your stop to break even. If it's gonna do this move, then you're gonna take it again here. Okay, easy like that. That's the entry strategy. Right, so the rest of the Euro pairs, EURAUD. So EURAUD, I've said for the last, I don't know how long, for a year, last year and a half, that we are not going to sell this pair anytime soon. And any structure that it makes is a corrective structure for upside. So let me see if I can find that very first trade that I posted on TradingView on EURAUD, because this is a perfect example of how amazing wave theory works. So I'm going to show you that, and I'm going to show you what the next move is, what we're expecting, and why we've been bullish for over a year and a half. So this is what we do. What we do is you need to find the long-term trend, and after you find the long-term trend, but you need to make sure that what you found is the right trend, and that is based on the wave theory and the structure. So once you've got the trend, all you do is buy the correct. If the trend is up, all you do is buy all the corrective structures. That's all you do. Okay, I think I'm gonna get to it now. There it is. Once you've established the trend, especially a weekly trend, so like this one here. See if we can scribble around here. So we had this move coming down here. Right, so we had this move coming down here, and actually this has changed to a ending diagonal. It changed to an ending diagonal, so we changed that labeling inside. So the buyers were still the same, even though the structure was different. So we still wanted it to come back down for a move up, and this move is worth 2,000 pips, just this first move. So I'm gonna play that. There's a reason why I wanna play this, so you can see why I have been bullish. And this was posted, let's see when this was posted. It was posted December 2016, almost a year and a half ago. All right, so you see, this was the forecast here. The green is where the forecast was. Okay, it makes that move that we expected to the downside, and then it started that up move that we were looking for. Okay, how does that play out? It reaches our target right to the pip, as you can see, for 2,000 pips. This move is worth 2,000 pips. Okay, so we get our target, and what happens? You get a big corrective structure. What did I say about finding a trend? After you found a trend, the only thing that you do is wait for corrective structures to keep buying this. So even here, as much as we were buying this, we're not only taking one trade. This was a trade there. This was a trade there. Okay, this was another trade there. This was a trade there. Trade, entry point. 1, 2, 3, 4, 5, 6, 7, 8. 8 trades running for 2,000 pips. Obviously, this does not happen in one day. You can see that this took over 3 months to happen. Okay, this was a 3 months trade, right? From March until June, 3 months, 2,000 pips. So now we are in this move here. What do we do here? We do the same. Every time it gives us a corrective structure, we've entered now. Every time you get a corrective structure, you keep buying this thing. Okay? So let's just play it. I think it plays out like that. After that, we're expecting another move to the upside. You can see that that is your correction. And this is simply an A, B. We're still building this C, and this C is not complete. Can you see here? We still have this corrective flag, and this is only just starting up. Okay, we are still bullish on this pair. So this is the first 2,000 pips. This is the current 2,000 pips that we're trading, and we don't have to trade it all at once. You keep buying. You can buy and sell whenever it forms corrective structures. So this is where I posted a special trade on EURAUD, I think earlier in the year, which just moved over 800 pips after the post. So I will link that video to this one at the end, so you can go and watch it as well. So this is where we are. We're currently pushing higher and higher with this pair. We're currently pushing higher and higher, and every corrective structure, when it does this, this is what it's currently doing now. You see, it's making a corrective structure. So when it breaks out of here, you buy. You keep buying it. See, that's the corrective structure. Any move to the downside does not scare me. I'm just not interested in the downside. I'm interested on only the moves to the upside, because all these moves, pullbacks, don't mean anything to me. I'm not interested, because you can see how slow these are. But once it starts going up, so actually the trade I posted was here. We actually, the day that I was doing the webinar, that we were here, and I said we were going up. We got this one. We got this one. Now it made this one. We are currently here today with this one. So we're going to go to where we are. And you see, once you've got the trend, this is a long-term trend, over 2,000 pips. Look, it keeps doing the same thing. How can you miss this? Whenever it does this, look at this V pattern there. Okay, it's doing exactly the same thing here today. And if it's doing the same thing, then it means we're still bullish. So let's go into it. Let's go where we are today. Let's clear everything and switch that off. So we are still bullish. So what is the overall structure look? What does the overall structure look like? This is what it looks like. I'm going to go back here again. This is the overall structure. Where are we going? We are going back up here. This is why we are looking at this 2,000. Now it's going to be 4,000 pips. We had the first 2,000 correction. Now this one here that may come and retest about 2,300 pips more to the upside. Why do we want that? Because this can be a regular flat like that will possibly come down after testing the top, like all the other pairs. Or you can even look at this. You can even look at this like this. This is 2012, when some of us were only starting to trade. I said A, a B, and a C. And you'd want your C to be a similar move to this one, C. So we just take that. So you see this one is still not done yet. So every corrective structure, you keep buying it, keep buying it. You keep buying. You've got the trend. Why worry? Okay, let's go 1 hour, see where we are today. EURAUD. This is what we have. We've got a 1, 2, 3 wave structure. Right, so this may have started a move to the upside like that. Because it's a corrective structure, as you can see. It's correction. Is it time for it to go? We need to see. It has made a 3 wave move. So if it makes a correction here, then it means it's gonna go. Otherwise, it can give us another one. Make it a deeper one like this. 1, 2, 3, giving us a WXY. But overall, this is still a corrective structure. And the deeper it is, the better for the move to the upside. Okay? So keep an eye on it like that. All right. EUROCAD. What more can I say? A good definition of structure. Let's go to the daily. For weeks, when we were still around this area, said we're targeting for this to come and test the top there. Let's do the straight line because my mouse is skew. We wanted it to take the top and look, not 1 pip more, and it reversed. Not because this is a support and resistance zone, but because this is the zone that builds the structure 1, 2, 3, and then there. So we're going to be looking for a move back down. So this move has already made some 200-300 pips to the downside just by looking at the structure. So, and we have been doing this every single Sunday here on these webinars, showing that this is a trend to the upside up to this level. Okay, so now we've got a move down. You need to get a clear corrective structure, maybe a 4-hour correction here to show that we're going to get a move down. Initially, we must get this move. Let's get this 1, 2, 3 here. Okay. Let's go 1 hour. Okay, on the 1 hour, it looks like it's making a V pattern like that. So if this is a V pattern, this may come back down for 1, come back up. But that may just be making a corrective structure for further downside. So let's keep an eye here. We haven't got anything clear for now. So let's wait for it to see if it gives us a move up like that. It's gonna be a short move to the upside. Overall, this whole move looks pretty corrective. Okay, it looks corrective. So it may bounce up for a move up, back up. So that can just be a 3-wave pullback. Let's see how that goes. So I think that concludes all the euros. Euro New Zealand. Euro New Zealand 4 hour. So your Euro New Zealand, you're looking at this whole move here, and now this correction that starts with the 3 waves, another 3 waves. Is this 3 waves done, and now we're going down for this one? We're gonna get a corrective flag to show us that we are now going for this move. Most of us in our group have already sold it here because we're focused on this correction. So we're gonna see if this is the move that we're gonna get. All right, so if we get that move, that may be a big corrective structure for further upside. So right now you've got this seeming move to the upside, up. Let's see if it does that, then you're gonna keep selling this one to the downside. That's Euro New Zealand. EUROCHF, exactly the same thing I said about the chief pairs. EUROCHF, 2-3 weeks ago, I said buy it here for a move at least here. I said buy and hold because this can go back and retest the top. It was either that can do that or it can be a 3-wave pullback. for further move to the downside. So we bought, hold, and we saw the structure on AUDCAD. So we knew that this was going to be a 1, 2, 3, 4, 5. And now we're coming to that level. So it looks like there's a small flag there that can take it right there to test. What did you say we were looking for with the chief pairs? All these ending diagonal looking structures, they are doing the same moves like these ones. Impulse down, it goes back with an impulse, and then it starts going down from there. So we'll see if this one makes the same move. And you can already see that it's slowing down. It may make a V pattern to indicate that we're going to reverse around that area. Okay. So what you have here is a small flag. Looks like a flag here that will take it for that last small move, but it's too risky to buy it at that level. All right, I think we've done with all the Euro pairs. Let's look at some CAD and AUD pairs. AUD, New Zealand. Let's look at AUD New Zealand first, because there's an interesting, no, let me look at New Zealand CAD first. So New Zealand CAD, the reason why I want to look at it, because it has got a very nice structure. So there's that pair, my favorite pair. That is not obvious for most traders, because it's got a seemingly looking complex structure. And how do you label like something like this? Even in the hard side, some people still struggle to identify the structure that is playing out here. Okay, so I don't have time to do that here now. You can watch the previous videos. We've already done that. What are we getting now? We're getting a V pattern there that can come back to retest this top here. It can retest, come back, and go, because we are bullish long term on this pair. Why are we bullish? So why are we bullish? New Zealand CAD. I've done a detailed analysis on this one. Maybe I'll attach this one. I'll link it to this video so you can just access it easily. We have this move here. And then you've got this correction here in the middle. We bought it here, and you can see here when it ended here, it ended with a V pattern. That's why we bought. And when we bought that, we knew that this whole thing here was an X correction, and we are looking for a similar move to this one. You can see how long this move took. Over 6 years, 5 years. So don't expect this to go in one move. So what we know here is that whenever we get corrective structures or bullish setups, we're going to keep buying them, because this is long term going to the upside. And right now what you have is a V pattern for our you've got a V pattern, you've got an impulsive move up showing you a bullish move. So if you get a flag, you buy this. It may come back and retest the top there. Okay, that's New Zealand CAD. AUD New Zealand. Let's do AUDCAD first at CADJPY. AUDCAD. AUDCAD looks like it wants to reverse as well. V pattern there. Wait for a move up. But it looks like this one can still give us one more down before it goes. Okay. And AUD New Zealand is the one that I actually want to look at, because it's got an interesting setup. If you look at this whole string here, very corrective string with a big pattern here in the middle that looks like a regular flat. And in here, you can see here, you've got lower degree 1, 2, 3. Similarly, you've got 1, 2, 3. Okay, you see that you simply have a W, X, Y in the higher degree, lower degree, W, X, Y. I usually don't put these Y's. W, X, Y there, W, X, Y. All the degrees are related, and what you are getting now is this V pattern here, showing us that we may be ready to reverse soon. And if we reverse here, we're going to get a three-wave pullback minimum to the 50% level of this. Minimum to the 50% level. So we're going to get that bounce, three-wave bounce. So you need to keep an eye on this on the reversal. Right now, it looks like you're going to have one more down before we get this move to the upside. Okay. So somebody commented on one of my videos saying that I should use the Elliott wave notation on TradingView. I use that. This is just for you to be able to see clearly. If I have to go use those things, it's going to be very complex. I think it's easier for you to see when I'm using the annotation. Okay. So keep an eye on the reversal there. You can see here there's already that short move that I'm expecting. That's not going to last. We're going to get a reversal. If you look at that, you already have divergence there. It's already starting to diverge, already starting to get divergence. That's out in New Zealand. All right. Okay, so let's look at the indices. Oh, before we do the indices, we need to do silver and gold. Silver and gold, gold and silver. Start with gold. I couldn't forget gold. Gold. So I did a special chart of the week on gold, I think last week or the week before. We're looking at this piece like that. Right, so what are we getting here now? So what we are getting here looks like there's a possibility that gold may be ready to go. And if it's gonna go, we were looking for this bounce here at the 61. We've got the bounce, but it was too deep. So this is doing this now. Even if it's gonna go, we're gonna get a move first up, a move down. And if this is the correction, then that means that gold will go from here, okay? But what we are looking at here is for this to give us this move. Remember, we're still on the theme of this giving us a long-term correction. Similar move to this one, similar move to that one, giving us a WXY. Okay, when I did the video, we wanted a bounce here. So will this be the bounce? This 1, 2, 3, before we get a move to the downside. Okay, possibly. And then if we get that, then that will be a perfect trade for upside. Perfect trade for upside. So let's see, it's going to be all of this move. This corrective move sideways, and the deeper it is, and you can see that it's been consolidating from end of February. So if it gives us this deep move, then this will be completed and we're going to get this move to the upside. That is if it does not give us this 1, 2, 3 that has started and pulls back in 3 waves and starts going like that. Either way, we will update this as it goes. Okay. Right now, it looks like you've got a small impulsive move here. When you get a corrective structure here, remember euro, US dollar, bullish. So short term here on gold, you need to get a short move to the upside as well. That is if it's not the one that's going to go. Right, so short term entry, if you want to enter this, you get a flag in the lower time frame or upside, in the 1 hour specifically. So you can see that this is still making this move. Short term to that level. So that's the move that you want to enter in case it's going to go all the way. Silver. For hour. Silver is making a V pattern. It's making this V. So we know the V is going to break to the upside. So what do we have here? We've got an impulsive move and a pullback. And what does it do? It makes very interesting. I've shown this move last week. It makes 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2. We want these 3 to come and complete to the bottom, and it looks like it may do this first before it goes up. Okay, that is if this 1, 2, 3, if this 1, 2, 3, the last one here, this one may have completed here, so it may be starting another one. Flag to the upside. So this is the one that I'm more inclined to. So look out for this flag here for upside, because this 1, 2, 3, the last one could have ended here, and we're starting this new one here for a move here. If it breaks, then you're good, you're in the trade. You're taking it here. Otherwise, even if you don't take it there, it's still okay. If it breaks, it will come back here and then it will go. That's how a V pattern plays out. Okay, that's silver. Okay, now looking at the indices, Taxman, I don't know what you were responding to there. I'm looking at your post on the chat box. All right, looking at oil. Oil never got oil wrong for the last 8 months. It's so obvious. This pair is so obvious. Let's go higher time frame. Daily. Look how obvious oil is. We've got this long swing high to this swing low here, which starts with this pulsing move to the upside here. After that, you get a running flat in the middle with this structure, the 3-wave structure like this, 1, 2, 3, and then from there, look what we get. We get a simple 1, 2, 3, 4, 5. After 1, 2, 3, 4, 5, what do we expect? We expect an A, B, C move. We've been forecasting this, not in hindsight. This is your B. Now we want oil to come back and retest that level before it starts going up. Okay, so when we were on this swing, I kept saying, every corrective structure, you keep buying. You see, this whole swing, you don't have only one trade. You've got 1, you've got 2, you've got 3. You could have taken 3 trades here for all these pips here. Now you're getting this deep corrective structure, which is good for upside. It's clear? This 1, 2, 3 here. Never got oil wrong on these webinars for the last year or so. Okay, because it's so obvious. It's so obvious. Yes, that's absolutely right. Whatever you're comfortable with. Remember, the labeling is just to guide you and to relate the degrees. Okay, so that's oil. Any other pair that I missed that somebody was interested in before we go into the indices? Okay, so S&P 500. So the indices, if we just go to the weekly, you see how they are always so bullish and you never get an opportunity to ride the trend. Only time was here when you got this nice corrective structure, and this happened over a number of years. This was not one move, right? And this was the 2008 recession. But all that noise about recession, the market crashing and whatnot, was all just an excuse to build the structure. Because look at the structure. Here's an impulse and then a correction. What does it do now? Now it's making a 1, 2, 3, 4, 5. Are we now correcting? We could be correcting here. Maybe we can even get a deeper correction here. Okay? We can even get a deeper correction because this is simple 1, 2, 3, 4, 5, ABC. Okay, so let's look where we are now with this correction. I'm just gonna go straight into the 4-hour and just look at the latest piece here. So this correction can be much deeper and much longer. As you've seen that we've completed 5 waves. So what we have here is an impulsive move down. We've got a three-wave pullback, which could be an ABC. If it's an AB and this C that looks like it's ending with a diagonal here, can be a move like that. So that can be one wave. Okay. This can even possibly give you another X, actually X in the yellow degree, and another move like that, making this a big sideways for a while. Okay. But you're not going to wait forever until you ride the trend. So if you're somebody who trades the indices for short term, this is what you need to do. Let's look on the 1 hour. But the idea here is to ride the trend when it starts going. It looks here that we had what looked like a V pattern like that, and this broke out and inside back here. So this could come back up for a three-wave pullback and come back to this level again. Okay. All will just be making this V pattern. And if it's making a V pattern like that, then you know that the indices, we are bullish. Okay. I was just hiding the video panel there. Okay. So that's how we're looking at this. So the rest of the indices, like your UK 500, have got clearer structures. The FTSE have got clearer structures. As you've seen last week, we were looking at these V patterns. You can see they broke. This is what we looked at last week, and it came and broke. What are we expecting now? A correction for a move up. Okay, so all of them are making similar structures. That is the FTSE, the NASDAQ. NASDAQ has got this move, impulse, three-wave pullback. If it comes back down here, we were looking for this to come and retest here. Okay, but it started making a V pattern around here. It can make a running flat if this makes this move here to the upside. Okay, so that could be a three-wave move for further move to the downside. Okay, that is the NASDAQ and the NIKKEI. Okay, somebody's asking for the Dow, but the Dow is similar to the S&P 500. We'll check it now. Right, so your NIKKEI V pattern, as we said last week, you can see that it broke. Now it's making this flag, showing continuation. So we should see short-term bullish moves in the indices in the next week. That is the NIKKEI and the DAX. We'll do the Dow Jones just now. Also, as you can see, the DAX, all of them, as we predicted the V pattern last week. You can never go wrong with the V pattern. Broke. This one didn't actually break, but it's making a flag for further upside. But if you look at this one, it looks like it may give you this move first. Impulse, correction, impulse, giving you this corrective flag for upside. So short-term bullish moves on the indices in the next week. Right, so the Dow, I haven't added it into my watch list. Maybe I should do that now. Add to watch list. Where is my add? There we go. Right, so this one also, you can see that V pattern. There's the V pattern. This one actually did not break. So this may do this first down before it go up. Or actually, because this is the 50%, this is the 50% back of this move. So this can start going with this move, making a three-wave pullback. But otherwise, in the next week, short-term bullish moves on the indices. Short-term. So after next week, we're gonna update it as well. All right. So now let's do the cryptocurrencies. Ravi is asking for TRX BTC. Let me do the 4 cryptocurrencies that we cover usually, and then I'll do TRX BTC as well. All right, so Bitcoin. So last week, I showed you the structures that is telling us that the cryptocurrencies may go down much lower. Doesn't look like the bounce is imminent anytime soon. So what we have here, I'm going to show it again. It's 1, 2, 3 wave structure, and it's a 3 wave structure, not a 1, 2, 3, 4, 5. What you're getting here is a 1, it's a 2. Here looks like you're getting a bearish pattern that will come back and retest here. So if we get this last bounce here and it starts reversing here on the cryptocurrencies, this is the move that we're going to expect to get. And that move will take the Bitcoin right down to where it started. So we need to keep an eye. So I'm expecting a bounce from here sometime soon, but we still have one more down here. And that bounce may not last. It will only reverse up to this level. And then we're going to get this move to the downside as well. I do not see the cryptocurrencies bouncing back anytime soon. And then we'll see when we get here whether we're going to get that parabolic move like we did here. Okay, so all of them have got a similar structure. Let's look at Litecoin now. Litecoin, exactly the same structure. I mean, I was trying to find a structure that can show me bullish sequences on the cryptocurrencies. I could not find it. This is what I see. This is all I see. This is corrective. This is making a bullish one, a bearish one for further downside. Could come and retest the low here. This bounce is not the one that's gonna go. It's not the one that's gonna go. So we'll be expecting this move back to where we started. Okay. Is it the bubble on cryptocurrencies? I don't know, but the charts are telling me that. All right. Ethereum. We only look at the charts. I never argue with the charts. Right, so Ethereum is a little bit interesting because if you look at this low here, this is the low that we want Bitcoin and Litecoin to come and retest. But you see that this one has broken it. This one has broken that low. So that may even continue to the downside on Bitcoin and Litecoin. But this still has a chance to bounce back and make an expanding flat at least. But even that will still make a move like that. Okay. So it may not be the bubble. Maybe when we get to these levels, we'll start getting these parabolic moves again. We'll start getting these moves again. But right now, the charts are telling us this is very bearish. Okay, that's Ethereum, Ripple. Let's look at Ripple. So Ripple also same as Litecoin, same as like Ethereum. Let's do that. 1, 2, no, like that. That's 1, that's 2, that's 3, and now we're busy correcting with this move. We're busy correcting this move. Are we going to get a bounce soon? Whatever bounce we get, same with the rest of the cryptocurrencies. Corrective structure. For a move down, let's see. This bounce won't make me interested in buying the cryptos anytime soon. Only after we've done this move, we've made this move and then down, I'll be interested right here. There I'll be very interested. Okay, Ravi has asked for TRX. That's the last one I'm going to do. It's not even on my watch list. So let's do TRXBTC. On the daily. Right, so there's no difference here in structure. Look at this. This is a pulsing move to the downside, pulls back and gives you this three-wave pullback. If we look on the lower degree, this is a 1, this is a 2, this is a three-wave pullback. Similar here, this looks like a V pattern actually, that pulls back up here. So here looks like you may get a bounce. Maybe get a bounce because it's giving you the structure. But how far will this go? Maybe only up to that level. Okay. So that can even be a three-wave pullback or further move to the downside. But right now it's looking bullish. Of all the cryptocurrencies, this one looks like it's got a bit of upside. All right, thank you very much for joining me. That's all I had for you today. Please like the videos, subscribe if you haven't done so. My contact details are at the end of the video. I hope you enjoyed it. Good luck for the week ahead. All the best. Cheers. Bye-bye.